The latest monthly CPI indicator came in hotter than expected, up 2.8% over the year to July. That's above Westpac's forecast of 2.3% and even higher than the top of the market estimate of 2.7%. So what is driving this surprise? And what does it mean for the RBA? The big contributors behind the strength of the month were housing, up 3.6% in the year. This measure includes electricity. Food and non-alcoholic beverages were up 3% in the year. And alcohol and tobacco, up a hefty 6.5% in the year. And while some food categories have eased, coffee, tea and cocoa prices keep on climbing to be up 14.4% in the past year. Does this mean inflation momentum is picking up? We don't think so, but we're watching closely as the core inflation measure, the TRIM mean, jumped to 2.7% in the year from 2.1% in June and 2.4% in May. Now, 1 month doesn't make a trend, but this move shouldn't be ignored as it contrasts with the expectation that core inflation is heading down to the middle point of the RBA's target band. In our preview, we flagged that the risks on the upside stemming from the combination of rising electricity bills and the unwinding of the cost of living rebates, and that is exactly what happened. Electricity prices surged 13%, more than double last 6% estimate due to the timing of the Energy Bill Relief Fund rebates and annual price reviews. New dwelling prices rose 0.4%, stronger than expected as builders reduced discounts and promotional offers. If this continues, it's a clear upside risk for our September quarter estimate. Clothing and footwear jumped 1.7%, while services like clothing repairs and dwelling maintenance also rose strongly. And holiday travel surged 4.7%, driven by strong demand during the school holidays, boosting the cost of domestic travel and accommodation. All up, most of the upside surprise was because of the stronger than expected rises in energy and travel prices in July, which combined contributed a little bit more than 0.6 of a percentage point to monthly headline inflation. If you add that 0.6 to our original 2.3 year estimate, you get the published estimate of 2.9%. Nevertheless, taking all this into account, the data points to an upside risk to our CPI forecast of 2.7% and the TRIM mean forecast of 2.4%. We expect the RBA will take a similar view, so there'll be no rate cut in September. Instead, they'll wait for the full September quarter CPI, due for release in late October. We'll see you next time.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published or reproduced in whole or in part without the prior written permission of Westpac.